Good evening and welcome to India Today. I'm Anjali Istawal. We begin this bulletin with breaking news coming in from Delhi. This is related to the demolition drive near the Turkman Gate area, near the Faiz-e-Ilahi Mosque, where yesterday we witnessed rioting by a mob. Now it seems 10 social media influencers have been held in this matter. They have been accused of rumor mongering on fake mosque demolition. Now the cops are focusing their lens on multiple WhatsApp groups as well where rumors were circulated. The people arrested are Afan, Adil, Shahnawaz, Hamza, Athar and Ubaid. All these people are being interrogated, and a woman influencer, Ayman Rizvi, has also been summoned and told to join the investigation. This woman had also put out a provocative post. It is believed that due to these influencers, rumors were spread amongst the people. A mob gathered over there, believing that the mosque will be demolished, and that is why the situation went out of control. Although the police was able to bring the mob under control, they had to use mild force. Now 11 stone pelters are already in Delhi police custody. But now the police is also coming down heavily upon the so-called social media influencers who were responsible for spreading these rumors. Remember, this was a mosque which is called Faiz-e-Ilahi in Turkman Gate area. Now certain buildings around it were illegal. There was a notice issued by MCD, which is the Municipal Corporation of Delhi, for the demolition of those structures, which included a marriage hall and also a diagnostic center, a parking lot and certain portions of a road. Now, when the notice was issued, the Masjid committee people went to the court and they got a stay on it, but later on the court, the High Court itself told the MCD and the police to go ahead with the demolition. This demolition drive was started in the middle of the night, but as it began, a few people came, and as soon as these people started protesting, the mob swelled, the crowd swelled to become bigger, and then stone pelting started. And after a little bit of use of some force, the police was able to contain that violence, but now the police is trying to figure out who are the people who were responsible for instigating this mob, instigating the stone pelters, and also remember 11 stone pelters have been taken in police custody. Let's listen to what exactly were the inflammatory and comments that were made which instigated the mob.
सब अपने दुकानें बंद करके सब बंद करके आइए इधर। ये देखिए मुसलमानों का क्या हाल है।
अब मैं आपको दिखाता हूँ यहाँ पर बिल्डोजर, ये सामने आप देख रहे होंगे बिल्डोजर। मैं दिखाता हूँ कितने बिल्डोजर आए हैं। मेरे भाइयों, घर पे बैठने से कुछ नहीं होगा, घर से निकलो, दरगाह फैज़ के बाहर आओ, पूरी रात काली करो, मस्जिद को कुछ होने नहीं देना है जल्दी से। ये देखिए, मैं ये अर्बन वाले रोड पर आ गया हूँ। अब मैं आपको दिखाता हूँ यहाँ पर बिल्डोजर, ये सामने आप देख रहे होंगे बिल्डोजर। मैं दिखाता हूँ कितने बिल्डोजर आए हैं। ये देखो, ये 1 2 3, क्रेन आई हुई है, ये 4 5, इसके पीछे 6 7 8 9, ये 10, ये 11, ये 12 13 14 15 16 17 18 19, ये क्रेन 20, ये क्रेन और 4 पीछे भी आ रही है, और ये क्रेन आ रही है मलबा उठाने के लिए। 20 तो ऐसे ही हो गई है, और ये देखो आगे भी बिल्डोजर है 4 और, ये देख लो 4 ये है। मेरे भाइयों, घर पे बैठने से कुछ नहीं होगा, घर से निकलो, दरगाह फैज़ के बाहर आओ, पूरी रात काली करो, मस्जिद को कुछ होने नहीं देना है जल्दी से।
And now we have news coming in from Tamil Nadu, where the governor has made a big attack on the Chief Minister, M.K. Stalin. And this is related to the Deepam lighting issue, the Kartigai Deepam issue. Governor Ravi has said that M.K. Stalin blocked the Kartigai Deepam lighting. Remember, this entire controversy had been brewing in Tamil Nadu, and it had even gone to the court. And now the governor is saying that there is a clear breach of High Court Deepam nod. The Stalin government had decided not to let the devotees light the Deepam on the Deepathun, which they claimed was not meant for that purpose and was not part of the tradition. But the governor now is saying that the state power was used to stall a ritual which had come down centuries and generations, but it was blocked by the chief minister. He also said that never before such a breach has been witnessed in India's history.
The Honorable High Court, Madras High Court, grants this permission. Yes, you go, you can lit the light. The state puts all its might to prevent it. Never before in the history of country, in the last 75 years, this country has witnessed a scenario like this. When an order of the High Court, if you are not happy with it, go to the Supreme Court. Go to the High Court. There are constitutional avenues available. But no. We will not allow.
So once again, the governor of Tamil Nadu has waded into a controversy that had been brewing. And remember, M.K. Stalin, the chief minister, and the governor have not been on the best of terms. There have been many issues that they have gone head to head on. Joining us right now is India Today's Pramod Madhav. Pramod, I beg your pardon, joining us right now is Anagha. Keshav, Anaga, do tell us the comments that have been made by the governor now. Have we seen any reaction coming in from either the chief minister or the ruling party?
Well, so far the DMK has not yet reacted on this matter. But we do know that the tussle between the state government and the Tamil Nadu governor R.N. Ravi is not something new. They've had a long-standing issue for a very, very long time. And this morning at a private university, when governor was making a speech, he has taken a reference to what happened in Tiruparankundram regarding Justice G.R. Swaminathan's order on the Tiruparankundram Hill. In fact, Governor R.N. Ravi says that the Justice G.R. Swaminathan was being intimidated by moving an impeachment motion against him in the parliament. And governor also says that whatever happened right now with respect to Tiruparankundram was unprecedented. Never before in the history of this country something of this nature has happened when a sitting judge has been threatened, is what the governor has said. But so far the government has not yet reacted on this matter.
Right, Annika, do stay on with us. We have another breaking coming in from Tamil Nadu. And there is trouble brewing in the alliance between DMK and Congress, as Congress MP Karti Chidambaram has now backed the power sharing call in Tamil Nadu. Karti Chidambaram said that power sharing in Tamil Nadu is not a new demand. Let's listen to what he said.
புதுதான ஒரு கோரிக்கை இல்லையே. இது நான் 2 வருஷத்துக்கு முன்னாடியே சொல்லியிருக்கேன். எல்லா அரசியல் கட்சிக்கும் தேர்தலில் நிற்கிறாங்கன்னா எதுக்காக நிற்கிறோம்? எங்களுக்கு பிரதிநிதிகள் வர வேண்டும். அந்த பிரதிநிதிகள் வெற்றி பெற்றால் அது ஆட்சியில் ஒரு அங்கம் வகிக்க வேண்டும் என்ற எதிர்பார்ப்பு தான் எல்லா அரசியல் கட்சியும் இருக்குது. இது ஒன்றும் ஒரு ஒரிஜினல் தாட்டோ ஒரு புதுமையான சிந்தனையோ இது யுனிக் தாட்டோ உலகத்திலே எங்கேயுமே வராத சிந்தனையோ கிடையாது. எல்லா அரசியல் கட்சியும் தேர்தலில் நிற்கிறது அதுக்கு தானே. இன்னைக்கு தேர்தலில் நின்னா ஜெயிக்கணும், ஜெயிச்சா ஆட்சி அமைக்கணும், இதுக்கு தானே கட்சியெல்லாம் இருக்குது. இல்லாட்டி நாங்கள் பாட்டில் ரோட்டரி கிளப் லயன்ஸ் கிளப்னு போடுவோம்ல.
And now let's go across to Sakshi Batra of Business Today, who joins us with all the updates of the markets. Sakshi, over to you.
Good afternoon and welcome to the market closing show here on India Today. I'm Sakshi Batra. First up, let's take a look at what's hot in the corporate and the financial world. Markets extend losses for the 4th consecutive session, with the Sensex now down 700 points, nearing 84,300 mark. Also the Nifty down 200 points, slipping below 25,900 mark in intraday trade. All the sectors are down in the red. We're also looking at metals and oil and gas facing maximum pressure. Foreign portfolio investors make a sharp sectoral shift in the second half of December, pulling out nearly 17,000 crore rupees from equity markets. FMCG and financial services see heavy sell-off of around 4,000 crore rupees each, while IT sector attracts some inflows, signaling a shift in global investor sentiment. In a major boost to the Make in India push, the Adani Group is tied up with Brazil's Embraer to build commercial aircraft in India. Adani will set up the country's first final assembly line for fixed-wing aircraft, with a formal announcement expected later this month. The US Supreme Court sets tomorrow as opinion day on President Trump's global tariffs, a case challenging presidential trade powers. Ahead of the ruling, export-oriented stocks are under pressure. Gokaldas Exports is down 12%. Shrimp stocks like Avanti Feeds, Apex Frozen have also fallen up to 7%. Silver prices extend their slide, falling nearly 11,000 rupees to trade now 2.4 lakh rupees on the MCX amid annual commodity exchange rebalancing. And the key US economic data, gold also drops 0.5% on profit taking amid strong dollar and rising bond yields. Viewers, let's quickly look at how the markets are trading in the last 20 minutes of trade. The Nifty is now hovering at 25,877, 1% down in trade at 262 points of a fall. We're at the day's lowest point, yet we had seen some kind of a buying emerge just about half an hour ago, but we have fallen under severe pressure. Now, all the sectors are deep into the red. Let's look at the India Wix. That's actually surging in the green, now up 10.66 levels is the level at which it is moving at, 7% higher for the India Wix today. And that's what indicates a lot of fear that's emerging back into the markets. Metals, oil and gas, even the PSU banks, they're all losing a lot of ground here. Broader markets under pressure, mid and the small caps also seeing a lot of losses. You're seeing IT, real estate, pharma, autos. Every sector that you can mark today is facing selling pressure. On the Nifty, brace yourselves. There's just about 6 stocks that are in the green. Rest of them have all fallen in trade. Eternal is holding about 0.8% higher. That's the top mover. SBI Life, ICICI Bank, Bajaj Finance. You're also looking at HCL Tech and BHEL as among those stocks that are still holding on to some gains. But rest, all of the stocks have actually slipped into trade as far as the Nifty 50 stocks are concerned. The top laggards now on your screens. Hindalco now losing about 3.5% in trade. L&T, Jio Financial Services, ONGC, Dr. Reddy's, Wipro. These are the top drags. Anywhere between 3.5% of losses can actually be seen on this one. PSU index completely in the red. Be it the defense names that were holding up into the trade in the morning trading session have all now slipped as well. The Nifty 500 names, where there are far and few between names that are still holding on to some gains, but rest of them have all slipped. When we look at the laggards, you do see a lot of names that are falling in prey to this kind of a sell-off in the markets. GM Breweries is down, Phase 3 is down, Tribhuvan Das, BMG Zaveri, Apex Frozen Food, all of them down in trade. Gokaldas Exports, Avanti Feeds, we marked out a lot of them for you in the headlines as well. These are all the stocks that are severely under pressure right now. Let me quickly go across to our guest now, Sharmila Joshi, market expert, joining in. Sharmila, warm welcome. Good to have you with us. The market's definitely not looking good at this point in time. What do you make of this severe pressure that we are faced with? Is it some fear of that 500% tariff that could be coming in if Trump really is looking to pass that bill?
It is a whole lot of uncertainties which are weighing down on the market. So yes, I think that the 500% that you mentioned could probably account for the last 200-300 Sensex points correction that we've seen. But overall, I think the mood has been sort of sluggish from the start of the day, and it's a lot of it's the geopolitics that's weighing in. We've been hearing of a trade deal, but nothing gets signed. So a lot of it seems to be that that there is good waiting to happen, but nothing is actually getting translated into action. And I think somewhere market is a little weary, because we've been now in this sort of a state of limbo for the past couple of months, and there is a certain sense of weariness that seems to be sort of creeping in. So hopefully things will change, but at the moment that's the market that we have, and that's the market that we must deal with.
What should investors do at this point in time? Should they just wait and watch, let this volatility play out, and just wait for sensibility to return to the markets? What should their strategy be in this kind of a market? Or should they be aggressive and buy these dips?
Aggressive, I think, is out of question because, as I said, this is now a state that has lasted for more than a couple of months. So caution is advised. However, I think that what one could possibly do and what I've really been thinking along the lines of is that if you like a stock, use this as an opportunity to buy. Now, there could be different reasons why you could like a stock, but I think to my mind, go for something that looks fundamentally strong and where there is sort of a story waiting to play out in the future, and buy with that 2-3 year sort of an horizon, and also stagger your buying. I think, that would be my main piece of advice for this kind of market. Don't, completely think that, oh, this is how things are going to be. And, because sometimes things bounce back very fast if something were to change somewhere. So start buying a little, keep nibbling and buy what you like. But definitely, I think some amount of caution is warranted. Also, when you buy, don't buy, put in your entire money in one go.
Absolutely. Let's shift focus to a big major boost to Make in India program that we've seen today. The Adani Group is now set to build commercial aircraft in India in partnership with Brazil's Embraer. So let me go across to my colleague Richa Sharma, who has more details on this development. Richa, good afternoon to you. Well, the Adani Embraer deal is for the final assembly line for fixed wing aircraft. What does this really mean for India? What do we expect?
Good afternoon, Sakshi. So it's a big thing. In India, we have two major airlines, and there have been a lot of orders they have placed globally, around 1,500 to 1,800 aircrafts. And government has been trying that, when we have such an aircraft, why don't those big players, there are two big major aircraft manufacturers, Airbus and Boeing, why don't they come to India and set up their assembly lines in India? But there have been a lot of talks, but nothing was happening. And Embraer is the first. They make fixed-wing aircraft, and they are the first one to sign an MOU with Adani. So this will put India on an aviation map, because when we have so much aircraft orders, but we were not manufacturing or producing them. So now there will be, Make in India aircrafts for global consumers also. So that's very important. It will also lead to job creation and a lot of those ancillary industry around the aviation market that would come up in the sector. So that is very important, and it will be the first commercial aircraft. There have been ties with Airbus or Boeing on the defense sector, but never on the commercials. It's the first thing when Make in India is going commercial.
Absolutely. So help us understand what's the future roadmap for operationalizing this deal exactly.
See, as of now, everybody is waiting to hear. I think, more details will be out during the Wings India, which is scheduled end of January in Hyderabad, where this deal will be inked officially, and we would know what is the kind of amount, that investment that will happen, what kind of aircraft that Embraer is looking to manufacture in India or the location. But for Embraer perspective also, we just have one airline, a regional player, Star Airline, which flies Embraer. But Embraer is becoming a global player because other players, any new aircraft request will only be delivered like 10 years later. So Embraer could fill up those gaps for the smaller demand, a mid-haul or a short-haul requirement for the bigger companies. So it's important that, players could look up to smaller aircrafts in their kitty.
Good point there. Thank you so much, Richa, for giving us all those details. This is an interesting development and definitely a big one when it comes to the aviation space. Sharmila, what do you have to think about it? I think commercial aircrafts now getting built in India, made in India, push forward, and now Adani Group right at the center of this.
Oh, absolutely. So as you said, good news, because definitely the recent events with Indigo and overall, I think, the way we've been seeing air travel take off, there definitely seems room for more, and definitely whether it is domestic travel or whether it is international travels, Indians do seem to be traveling at a rate which we haven't witnessed before, and that's something that's only likely to go up. So I think it's very it's good thinking that you need to see some kind of manufacturing in India, because we are such big consumers ourselves, apart from what we could be looking at selling outside. Also, I think in that sense, probably Adani is a good name to come up in this, because, they have sort of always said that they are there as disruptors in the infrastructure space. So who better than them to take it on as a challenge? So I think it's good news all around.
Okay, viewers, shifting focus to a big breaking news coming in your way and on your screens now. Reuters sources have told citizens that India now plans to scrap curbs on Chinese firms bidding for government contracts. This is what Reuters has said, that India may be scrapping China curbs. Also, Chinese firms may now bid for government contracts, and capital goods stocks can actually be seen under pressure at this point in time. You can see BHEL now sliding sharply intraday trade. Capital goods shares are also seeing a sharp fall, at least at this point in time. And that's the key news and the impact that you see at this point in time. As Reuters has reported that India is now planning to scrap the curbs on Chinese firms, and therefore they can now go ahead and bid for government contracts. This could be a negative for the domestic companies, and therefore you do see the capital goods majors are seeing a sharp fall in trade, 8% lower for BHEL at 279. Let me go across to Sharmila to get a sense of what could this mean for domestic firms, which kind of firms could actually be on the receiving end of this, and what could be the knee-jerk reaction, and how to play that negative moves right now. Sharmila, how do you see this? Of course, this may be good news for the Chinese firms. All the curbs that stand in place may be scrapped when it comes to them bidding for any kind of government contracts, but that would mean lesser opportunities or more competition for the domestic companies.
Very honestly, I don't know what to make of this news, because when you say bid for government contracts, what kind of contracts? Because if you are, if you look at our history with China and the fact that they are pretty much viewed as an aggressor, then I don't know whether it makes a lot of sense, because a lot of the government contracts are fairly sensitive in nature. So I don't know which are the spaces that are going to be allowed for them to bid for, or whether this is really something. Because if you were to just read it prima facie, then obviously I think it's not great news definitely for all the PSU plays in infrastructure, because they have been the ones who get the orders for whether it is to build power stations, or anything that is sort of sensitive in nature and which is large size, whether it is defense, whether it is any big infrastructure, highway project, dams, etc. So I think that maybe perhaps you should just wait for a little bit of clarity on this, because I think prima facie, I think, with the way the stocks are reacting, which is what I would think, that it's not great news.
Absolutely. You do see L&T, BHEL, Siemens all coming under pressure at this point in time. Remember, these are curbs that were in place after the Galvan clash that we had seen at least 5 years ago. And then finally, these curbs are getting lifted at this point in time. Therefore, you do see some pressure really building on there. But of course, more clarity will have to be seen going forward from here as to what kind of companies, for what kind of contracts they can now bid going forward from here. But let's also try and understand why the markets are falling is also because consistently all through 2025, we've seen foreign portfolio investors pulling out from the Indian equity markets. What we've also seen is that in the month of December, the last month of 2025, they've actually reshuffled their sectoral bets. In the second half of December, they've pulled out nearly 17,000 odd crore rupees from Indian equities. FMCG, financial services, auto stocks have actually seen some of the sharpest sell-off from the foreign portfolio investors, the foreign investors at large, whereas they've actually put in money in IT, in consumer services, in metals. They have attracted some flows, and that somehow signals a shift in the global investor sentiment. So let's try and understand this for better retail investors as well. Sharmila, one we have been seeing all across the board in 2025, there were two clear trends. One was that from the secondary market, the FPIs were pulling out money. In the primary market, they were trying to scout for more opportunities. Two, now we are getting to understand in December, they've tried to make this shift away from, the sectors like autos, for instance, that had started to move up in September, from FMCG, financial services that had largely performed well in 2025. But IT, which had been a big underperformer, is where they've now put in money. Metals, which has started to move again, they've started to put in more money now. How do you understand this shift from an average retail investor's perspective?
Yes, again, I think that if you were to see the sell-off in financials and autos, it sort of makes sense because you're profit booking. As you said, financials was the best performing sector for the last year. So if you made any money, it is the money that you made if you were invested in stocks in that play. And autos, post the GST news, they really rallied, and we saw a run up. And in fact, even in this month, we continue to see a good performance from the two-wheelers, and the numbers also look better. So that's definitely a story that is happening. But maybe there was some room to book profits there. But FMCG really surprises me because I think, the GST cuts will also have a positive impact on a lot of FMCG play. And this is not a sector that's done well. It's strange that there was profit booking there. And again, I think if you look forward, if you were to see the trade deal happen, which one hopes again happens sooner rather than later, then that will sort of bring some semblance and some calmness to IT, pharma, and therefore there could be sort of forward thinking in investing in those sectors. That could be metals again is a globally well-performing sector.
Yes.
We are seeing what's happening across because this is one sector that is tied completely to what is happening on the global stage more than what domestic companies are, what is happening here. Because here I think things are pretty much okay. So it's because what the takeoff that we are seeing in metals globally that we have. We've seen buying coming into a lot of the metal stocks, and I think that's likely to continue while you have that kind of upbeat environment overseas. So that I think kind of makes sense. So as I said, the only surprise to me as a retail investor is really the sell-off that we've seen in FMCG because, to my mind, like for instance, Nestle is a big beneficiary from the GST cut. Almost, I think, 70 to 80% of their portfolio stands to gain. So it's a little surprising that they were selling there.
Absolutely. So that's as far as the money flow is at this point in time. Viewers, but let's shift focus to diamonds now. And De Beers, the world's leading diamond company, which once gave the world an iconic line, a diamond is forever. But remember today, natural diamonds are actually facing newer challenges from lab-grown alternatives, from falling prices of diamond to tariff-led pressure on exports as well. In the latest edition of the Business Today podcast, De Beers Group CEO Al Cook explains why he believes diamonds should face zero tariffs. Let's listen to what he had to say.
Geopolitically, tariffs are very challenging for the diamond industry. We're a global industry. And of course, the fact that there are 50% tariffs on India from the United States is a disruption to the diamond industry. But I'm very confident that between the United States government and between the Indian government, that we're going to see a resolution to that, and we're going to see those tariffs go away for diamonds entirely, so that diamonds can flow around the world the way they should. There shouldn't be a tax on love.
When you talk about the prices, I've also seen that diamond prices have also fallen. I think they peaked in 2022 and thereafter they have been correcting about 25% odd. This is also the same time when we've actually seen the other precious metals like gold and silver surge with a record run-up that nobody ever imagined. When diamonds are also looked at as an investment opportunity, how would you explain to the investors when the prices are falling right now? What are the key reasons? Why are prices falling so much?
Well, I think the first thing to say is if you look at the price of a diamond at retail in the United States, say a 1 carat diamond ring, the price of that has stayed stable for the last 5-10 years. So that's been a good source of stability there. Rough diamond prices always go down and they go up. And with the tariffs, with lab-grown diamonds, we've seen rough diamond prices fall. We're very confident that over the long term, there'll be a tremendous store of value because, quite frankly, they're not making them anymore. The earth has stopped making natural diamonds. In fact, we've only discovered one new diamond mine so far this century. And diamond supply has been going down for the last 15 plus years, and we expect it to go down in 2026 as well. So when you've got something that's rare and it's becoming rarer, that's a good way to look at whether it'll appreciate in value.
So in 2026, what's your sense? How will the prices be? Will they recover? Will they bounce back? Or is there still further some room for correction?
I think at the retail level, they'll stay pretty constant. At a wholesale level, I think we'll see something quite interesting happen, which is the really large diamonds, the kind of diamonds that you might see on a celebrity's engagement ring, Taylor Swift's engagement ring. They're already going up in value. We're already seeing demand outweigh supply. On the other side, small diamonds at a wholesale level, they've come down a lot in price, and we see that being a much more gradual recovery over the years because there's been some oversupply of that over the last few years. So it's a bit of a difference now between the larger diamonds that are truly iconic going up in value and the smaller diamonds, which will take some time, I think, to recover.
You can definitely watch the full podcast on Business Today's social media handles flashing on your screens, as well as De Beers Group CEO Al Cook also explains as to what is the kind of expectation he has on lab-grown diamonds vis-a-vis the natural diamonds over the next course of 5 to 10 years. So stay tuned for that on Business Today. You'll be able to watch that today as it will be out, and of course on the social media handles as well. Let me now shift focus to the markets right now and see how the markets are shutting shop. We're just about a minute to go before we close for the day. So let's shift focus there, and then we'll take some of your questions with Sharmila. 25,869. So we are now inching closer to 25,850 viewers, and that's where the pressure is emerging. 270 points of a loss, over 1% kind of a cut on the Nifty. The Nifty Bank on your screens, about 0.5% lower, 59,676. Across the board, there is clear pressure that is being seen. That's the top laggard on your screen, viewers. The Nifty Metals Index. Remember, for the last couple of weeks, we were seeing so much of action on the metals. It's given up a part of those gains, 3.5% lower in trade. Oil and gas also down by nearly 3% at 11,570. You can clearly see some pressure on the commodities across the board there. IT stocks also under pressure, 2% lower. Remember that export-oriented growth is seeing some kind of uncertainty from fresh tariff sanctions, those kind of news coverage that's coming in. PSU banks also, which had come into flavor over the last couple of weeks, seeing some bit of a pressure there, about 2% lower for the PSU banking index as well at this point in time. That's the auto stock for you. Remember last couple of sessions we had been seeing the numbers driving up the momentum there, 1% lower for auto stocks as well. In fact, all the sectors have ended lower. That's the broader market for you. Mid caps now down by 2%. They have underperformed even the benchmark index in that fashion. Small caps also down by about 2%. 25,868, 272 points lower. That's the final print for you, viewers, as far as the Nifty is concerned. Gainers limited as they were. Zomato, SBI Life, ICICI Bank on your screens, about 0.5% to almost 0.8% of gains there. Bajaj Finance. Those are the limited 4 gainers towards the end of the session today, and that's why you have only 4 gainers on the Nifty 50. Rest of them have all slipped. Hindalco, Wipro, Jio Financial, you name it. All these stocks have faced certain pressure. Time now to take your questions, viewers, as far as Sharmila is concerned. She's with us to answer your queries. Sharat Sinha from Lucknow has the first question for you, Sharmila. And Sharat says, there is heavy selling in metals and oil and gas stocks. So is this a good opportunity to buy into the quality names at these lower levels?
Oh, well, honestly, if first of all, oil and gas as a sector, I really don't ever really recommend investing in that, for the simple reason that, it's too sort of controlled, it's too sort of deeply linked with your, what happens with your inflation. So you're never really allowed, the sector is just not allowed to sort of perform on its own. When prices go down, there is some tax that is imposed. If prices go up, then some other thing comes in so that inflation is kept under control. So I sort of steer clear of the sector. It's a good sector, but I sort of steer clear of it. Coming to metals, I think we were just discussing a little while earlier. I'm not very comfortable with the valuations of a lot of the stocks, but I can't take away from the fact that globally there seems to be a sort of a great up move. You hear of almost every metal apart from the precious metals, whether it is copper. The kind of reports that we are hearing does seem to suggest aluminium, copper, that this rally could continue. So let the correction, so we are seeing a little bit of a profit-taking correction, let that happen, and then you could look at it. But very honestly, as I said, oil and gas I would rather avoid.
Okay, the next question we have is from Arpit Garg, who's from Shimla, and he says the tariff-sensitive stocks are now under pressure. So the current levels, are they offering any buying opportunities at all? I believe he's talking about the export-oriented sectors. We saw a lot of pressure today on the likes of Gokaldas Exports, maybe even Avanti Feeds, Apex Frozen Foods. How are you looking at these export-oriented sectors?
So, yes and no. I think definitely, perhaps, as we are saying, IT could see a bit of a bounce back. You could look at select pharma names, maybe a name like an Avanti Feeds, etc. But I'd go a little sort of slow on the textile names and related, because I think there it gets a little sort of that I think could be a little tricky still, going ahead. To my mind, the first to recover could be stocks within the IT sector as well as the pharma sector.
Okay, the next question is from Sunidhi Das from Kolkata. Sunidhi says, will the decline in silver prices continue or is a rebound likely? That's $1 million question there. So people still looking for any kind of an opportunity, Sharmila, to enter into the big bull run that we've been seeing in silver prices all across 2025 and in the beginning of 2026 as well. And these periodic dips that we are seeing, 10, 11,000 rupees or today also, how would you look at it?
So, we've been discussing this for quite a while. I think a couple of times earlier when I've been on your show, we've discussed this as well. My approach has been to really advise investing in a silver ETF. So I think, you need to be periodic and keep making your investments. Because I think that whether it is the way the geopolitical situation in the world today is, the way we are, in relation with a lot of issues happening around the world, to my mind, it makes a lot of sense to have exposure to both gold and silver. And for me, the method is to have a gold or a silver ETF rather than buying actual gold or silver. So that's the approach. I think that especially young investors who are starting out, I think that's what they need to keep in mind, because the world is not the same place, and you do need to have that little defensive play that comes from having precious metals in your portfolio. So I would recommend silver or a gold ETF. Such corrections will happen because the prices, if the price of silver goes up the way it has, you will see corrections, which is why I said ETF, and ETF that you invest in at regular intervals.
All right. Thanks a lot then, Sharmila, for being with us on the show and, of course, explaining a lot of insight that you've shared with all our viewers across the segments of opportunities in the markets. Always a pleasure to have you with us. And viewers, in case you too have any questions about your investments in mutual funds, in stocks, your SIPs, gold-related queries, then please do send them to us on the number that's flashing on your screens. We'll be happy to address them with our top market experts. And don't forget to tune in at 9 a.m. tomorrow morning for all the market opening action. I'll be back for that.